Hey everybody, welcome to Trading Capital's Daily Analysis video. It is May 26th here on this Thursday, jumping into the close on the S&P 500 here, the SPY. A magnificent rally in the markets today. The S&P is up over 2.2% as we speak. The Nasdaq did touch a high of over 3%, but right now it's at 2.94%. So you can clearly see this beautiful push into now your short-term moving average, your 25-day moving average. You did fill this technical gap window here. The gap fill is still a little bit higher, which I do think will hit at some point in time. Let's just flip to the 10-minute intraday chart. Look at this rally. So usually when the scenario that we have been witnessing unfolding over the last several trading sessions, usually when we gap up, we crack back to the downside. This go around we gapped and we completely went. So this is called a gap and go process. It's very, very healthy with the fact that we are looking like to close above this gap zone. So if you look at this on an intraday basis, the resistance that we pointed out in our previous videos was this trend line, and you've actually rallied past that trend line, and I thought you were going to come back for a test back to support, but it looks like you're ripping through and you could be having some sort of potential short squeeze. So if we flip to the hourly chart, we'll see this a little bit better. Nice, beautiful pattern. You're attacking this gap fill over here. You will have a secondary gap fill around the 410 level. So there's going to be tons of resistance once we fill this gap and this gap. The markets can potentially do some sort of a check back once we get there, maybe down to here. And then hopefully we can continue to see some robust upside, maybe all the way up to this gap fill. But we'll have to reassess as we go. Nonetheless, the markets have had that terrific bounce. If we take a look at the QQQ, same sort of thing. Nice rally off of the low here, off of this downsloping parallel channel that we've been watching for quite some time. Clearly, it's still demonstrating major support and major resistance zones. I do think we fill this gap at the 306 level at some point, and then potentially testing this longer term trend line that we have been watching all the way back here. What a magnificent trend line of resistance this will be. It's picture perfect. Pivot to pivot to pivot to a kiss, and then you broke down, and now you should retrace back to that longer term trend line of support that was support, which now favors to be resistance. The big asset class on the day that we'll analyze is natural gas. Natural gas, let's just flip to the daily chart. What an amazing price action. This is what we have been calling for. We have been seeing distribution signals after distribution signals. I've been having people message me fearing on the short side, you know, when's natural gas going to fall? It's taking so long. I'm just going to get out. I'm not going to short this. It's going to $25. It's going to $50. I've heard it all, and the sentiment has been completely bullish now, which generally that's when the turning point happens. And the beautiful price action that we witnessed today in natural gas is it actually made a new high right into resistance. I was looking to potentially add to our short at this level, connecting these pivots here if it pushed up a little bit higher. But we did not get afforded that opportunity, but I am okay with that because we have a large position in natural gas short. The probabilities dictate when you have not one reversal candle but a second daily bearish engulfing topping tail, I would dictate that this holds the probability of around 80%. Sorry, I don't dictate, but the technical analyst patterns dictate. If you had to look at 1,000 of these patterns, 800 of them will most likely break much, much lower. Now, due to the power of natural gas being so extended, you are going to have a little bit of support at the 50-day moving average after you attack this closing red bar over here. But I do think you hit this level of support for a potential bounce. I'm still in the camp that if Europe waters down their energy sanctions and continues to buy the natural gas from Russia, then we could break this trend line, especially with a slowing economy, and test the lower range over here. At this point, we'll just have to keep monitoring the price action day by day, but nonetheless, a beautiful reversal on a volume, a magnificent amount of volume, actually a volume candle that is preceding all of these tops here in volume. So that is extremely healthy to see. That's exactly what we want to see. We just need to hold on to this daily engulfing candle for another hour and 9 minutes, and I think we'll be greatly rewarded for holding this to the short side. If we take a look at UNG, same sort of thing, popped up, made a new high, and a bearish daily reversal engulfing candle. Oil's been strong on the day. You notice on the WTI chart here, you've come up into your resistance once again. You've hit it, and it looks like you're just kind of consolidating under there. However, I still think you're going to fall a little bit lower, especially since the GDP numbers for Q1 have been revised down again, coming in at minus 1.4% contraction. That just shows you that the economy is slowing. With a slowing economy, energies usually fall drastically. Let's take a look at some of the other positions that we did today. So I'll just search them over here. So congratulations, we banked 3 winners. We pulled 3 of our long trades off the table, and that is proving to be an excellent job. We sold BABA for 13% gain. We sold STNE for over 17. Let's take a look at Redbox. We are shorting Redbox now. We are in the money here at 820. I was looking to add to our short position at 965. It just missed that high. I do think we come down to this gap fill at the minimum around the 680. I will look to cover there. That would net us a beautiful 17% gain. Right now you can close it if you want, if you don't want to hold it over, but that would be roughly a 7% gain on the trade, and that was just today. And Redbox is still up on the day over 12%, but we had to execute this short. One of the reasons we shorted it is you have this longer term resistance, boom, boom, boom. Redbox is a company that can go to zero. It could honestly go bankrupt. And right now you are putting in this bear flag consolidation for a likely move lower. So I feel very comfortable in that. We are also shorting Dollar Tree. If I look at Dollar Tree here, DLTR is the ticker. We're slightly out of the money, just sitting at 158.49. Dollar Tree is into significant resistance. Look at this double gap zone that we touched in our earlier video. So I don't expect Dollar Tree to move much higher. If it does, we have plenty of room to maneuver and continue to DCA into a short position that will put us significantly in the money at some point in time. You have to remember, look at the stock that the collapse this just had. Yes, it had positive earnings, but it also had positive earnings here, positive earnings here. So the chances of this falling down in a contracting economy, a slowing economy, is very likely. Let's take a look at Pfizer. We're also shorting Pfizer over here. So Pfizer's putting in this beautiful reversal. It's not a complete reversal candle yet, but if this can close negative on the day, that would be truly impeccable. One of the reasons I'm shorting Pfizer is we have this longer term trend line here. Pivot high to pivot high to pivot high into resistance. You're also on a 1, 2, 3, 4, 5, 6 day time count into major resistance. So that is going to prove to be an excellent short on Pfizer. If it goes higher, our next addition will be around the 56.60 level, and then ultimately the double top. But I do think it's a long shot for Pfizer to approach the double top. But there's always that chance given the markets could have a continued bounce. But I feel very comfortable at shorting at these levels. At the minimum, where do I expect Pfizer to go? Well, you've been trading in this wedge pattern that looked to have been breaking up to the upside, but you kind of did this fake out. The institutions are notorious for breaking patterns out of wedges and then closing them in at the end of the day, just so that you capture in those retail traders looking to buy a potential breakout, which actually turns to a fake out. And you can see it's turning into a beautiful reversal candle. We are in the money right now, so excellent job on that trade. If you flip to the hourly basis, also one of the reasons why I decided to pull the trigger, maybe it was on the 30-minute. I thought there was a gap. Never mind, that must have been another chart. But nonetheless, it's going to turn out to be a nice profitable one. Where I think the downside is you break this wedge at some point. You will have some support on the wedge, but I do think you test this first trend line around the 45-46 area, and it is down sloping, so it could take a little bit longer, and this would mean it would go a little bit lower. If we take a look at Caterpillar, we're shorting CAT now. One of the reasons we're shorting CAT is, again, you're into resistance. Notice how you have this trend line over here, which you're approaching, and you also have this trend line over here, which you are looking to temporarily break out. But we just shorted CAT around the 212 mark, and we covered it for a 7 or 8% gain over here just basically a week ago. Now we're accumulating CAT at an even better level with potential to add and increase our exposure. And with, again, a lot of the same fundamentals are going to drive why we're shorting these stocks. Slowing economy, contracting GDP, less infrastructure, less homes being built. Caterpillar is notorious for supplying equipment for builders building homes, and I potentially foresee a massive decline in the housing market, which is one of Caterpillar's direct industries and one of their biggest industries where they supply most of their heavy transport equipment. So with the declining GDP, with the Fed selling mortgage-backed securities in the amount of $35 billion a month starting next month, I do certainly think Caterpillar is going to see some significant downside. You have been trading in this bearish wedge formation for Caterpillar, so the odds do favor a break to the downside. A longer term trend target, I'm looking at 178. Whether or not I'll hold it down there, I might cover my short around 185 level, but we'll just have to assess the price action as it goes. We're also starting to short CNQ. So notice the theme that we have done today. We closed 3 longs and we've opened up 3 shorts. So as the markets bounce, I'm anticipating that the bounce won't last long. Maybe we have another week or a few days worth of a bounce in us, but I anticipate that the bounce is going to continue to fall as the Fed execute their tightening policy. So CNQ, you've kind of negated this head and shoulders formation, but you might still have another one that could play out. And one of the reasons I shorted CNQ is because it's had a nice bounce off the lows. You are into resistance. See this reversal candle here where price action sold off. You also have this reversal candle here. So you're into these massive reversal candles, and it does favor that since you filled this gap up here, a reversal is likely to the downside. Now, you did have a neckline here in which you breached. This could have been your right shoulder. You had a reversal down. You confirmed below on 1, 2, 3 candles, and then you popped up, recaptured the trend line, sold back off, and now you've closed above it. So technically this pattern is still in play, the head and shoulders, but now you're going to have a bigger one that is in play. This could potentially be a bigger head and shoulders coming into the equation, where you have this right shoulder over here, you have this bigger left shoulder that could be forming as you potentially come down over here. Once you trigger the neckline, your downside targets in and around this longer term chop that you were trading in. So I do think, again, the same theme, recession, recession, recession. I don't think you can deny that we're heading into recession. It's truly going to be a nasty one since we haven't really experienced economic tightening in the form that we're doing since really 2008 era during the housing crisis. So plenty of action. Plenty of action over there. We'll have to monitor how natural gas closes on the day. But nonetheless, I am loving this price action. A couple stocks that I just want to put on people's radar. So I'm really eyeing up shorting the real estate sector. So the ITB is an ETF that can give us exposure to a short. And I was very close to pulling it today, but I think I'm going to wait a little more until the markets have really finished their potential bounce. So one of the reasons I was going to short was this over here. You have your first major level of resistance coming in at this pivot. You just tagged that today. You are temporarily breaking out, and you could potentially get some sort of confirmation tomorrow of a short-term breakout, which may reverse and turn into a fake out. So I'm hoping that we go up to fill this gap. This will be our first level to short, and then we'll look to accumulate up here. But we may miss this trade, but I do think that the housing market, specifically the ITB here, let me just throw on my watermark so you can take the name of it down. So I do think that shorting construction is going to definitely highly correlate to the overall housing market. So this isn't a real nice pattern that's playing out for ITB. I do think there's a potential you can go retrace back up to this top of this channel, which would still technically be a nasty bear flag that's in play. And I do think at some point you, at the minimum, you have to retrace back to this COVID zone over here. And then more importantly, I do think that there's a key gap fill all the way over here, that if the recession gets nasty and the Fed doesn't introduce QE too quickly, then you could come all the way down to this 36 level. So that's an interesting one that we're keeping on the radar. Another one that we're watching is DXC. So let's just take a look at DXC. DXC has had a tremendous pop today. It missed on earnings, but it still rallied up over 16%. The short level for me on DXE is this gap over here around 35.56 area. If it manages to get through that, then we have these downsloping lines that will act as your secondary resistance, and then we'll just have to monitor the price action as we go. But DXE certainly more downside ahead, despite it missing on earnings. I think it was just a sympathy bounce due to the fact that it is oversold and the markets had that significant bounce on the charts. Let's just review some of our other positions like Netflix. Netflix had a beautiful move today. Whoops. Let's just type it there. That's right, I was transposing. So Netflix, if we go to the hourly chart, Netflix has broken out and confirmed from this inverse head and shoulders pattern. The upside implies around this 220 area, so that will significantly put us in the money, which is awesome to see. So we continue to hold Netflix and wait for this bounce. If we take a look at Amazon, a phenomenal move on Amazon today. Let's just go to our actual Amazon chart. So there we go. So our Amazon chart, we're slightly out of the money still. Our average is 22.76. But Amazon has had a beautiful move off the lows today. It was up over 4%, closing up 4% on the day. I do think there's a good probability that we can come up here to fill this gap around the 225.20. That would significantly put us in the money, and we would be looking to trim our profits. But Amazon is making a move to the upside. There's significant buying underneath it, especially after today. Let's take a look at Apple. Apple, we are in the money today. The stock did catch a bid. It was actually interesting. It was lagging earlier on in the day, but look at this clinical pattern. I don't think it gets any clearer than this. Left shoulder, head, right shoulder, inverse head and shoulders, neckline, downsloping yellow line over here. You broke this neckline, confirmed above it on volume, and now look at it. You've broken up to the upside, and you've pretty much eaten through half of the upside target, which is great to see, because once this pattern completes, that puts us in the money over 9%. So that's where we're probably looking to exit, depending on what the spiders and QQQ look like. So just going back to the Qs finished up on the day around 299.05. If we flip to the hourly chart, you can see there's still some after hours trading trickling in. Great to see. UNG closed on the day at 29.73, so we got that daily bearish engulfing candle. Beautiful reversal. Natural gas still has about, let's just see on this chart, 56 minutes before this natural gas chart closes. It'll be nice if we can see a flush down and close below this intraday moving average, which could be likely. I mean, you are consolidating bearishly, and I mean, the pattern has had a sharp move down, but natural gas has a tendency to make quick declines in both direction, either up or down. So I think that's a really cover. We can go over, let's go over the TDOC chart just so we can get a grasp on that. TDOC has had a decent move today, up over 5.5%. So I do like the pattern that TDOC is forming over here. So we're up right now 10% on the trade. We could have been up over here around 13-14%, but I'm liking the pattern that TDOC is showing. Yes, you've ran into resistance. Now it looks to be you're consolidating under this resistance in a potential move to break higher. If you break through these highs, your next area is attacking this gap fill at the 39 level. I think we have a very, very decent shot to get to that level. If we start breaking through, that would be a phenomenal gain on TDOC for us. So let's just monitor TDOC. We can protect the profits heading into tomorrow or next week, but it's good to be that we're deep in the money on double-digit gains already, and we'll just have to continue to watch that one. Spotify is very similar. Spotify, we're up over 12-13% on the trade. That's great to see. There is that concerning gap fill over here, but the interesting thing about Spotify is you do potentially have this inverse head and shoulders again that could be breaking out. So if we draw the left shoulder, the head, this could be your right shoulder forming, and your neckline would actually be around, so this would be your shoulder, and that would be your neckline right around there. So you can see we're bubbling up against it, consolidating underneath it. If this neckline breaks, let's just calculate where the max upside move of this pattern would be. This pattern would take us to roughly the 132 area, and it just so happens to be a gap fill, also a gap window. So that could coincide with a massive move up, and that would be again another very profitable trade for us. Will we hold that long? I don't know yet. The market dynamics, what the spiders and the QQQ ultimately are doing and what levels they're at will dictate whether or not we keep riding Spotify up or sell it down. So I think that is it for today. Tomorrow will be an interesting day. I do think the markets will have extremely light volume, so it does favor a potential float up. Maybe we get some sort of a check back on the SPY. Let's just take a look. Maybe we get some sort of a check back testing the support channel or testing the support line over here. Potentially we could collapse into this gap and then start rallying up, but I do think the markets continue a bounce. It's just a matter of how far do we pull back, whether it's to this support or this support, and then we rally. But light volume does favor more upside. It is a long holiday weekend in the States, so Monday's trading is closed in the States. That's why I generally do favor a float up tomorrow on light volume. A lot of the A traders, the big traders, already started their vacation today, so a lot of them are going and won't be really doing many big trades or heavy volume trades. So stay tuned for more trade alerts. Thank you all for being members. Let's continue to maximize these profits. We have closed an exceptional amount of winners this month, considering we have been in 7 consecutive weeks of downside selling, and we're still managing to bank trades after trades after trades. Is just a phenomenal outcome. Thank you all for being members. Take care.